Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. All right, so my light's not working here. We'll fix that in a second. I got a couple of things here we got to deal with. Oh, I forgot my water too. Oh my gosh. You know what? It's been a morning. Okay, it's didn't go to sleep last night. Let's check the charts. So first thing I'm noticing is that UB is up 1.4%. That's pretty big. That's pretty big for treasuries overnight. Well, let's come and look at the volume profile. How does that look on the 10-year? Oh, that looks pretty good. That's a pretty good jump over the weekend. Which I'm not really sure why. I guess there must be more geopolitical tension. But we are on the upside here in the treasuries. S&P 500 a little bit higher actually as well. That's kind of curious. Gold and silver. Oh, sorry, not gold. This is oil. Oil just still following this trend line fairly nicely, I would say. Okay, so gold did take a bit of a hit. Silver, not as much, but it was down. Kappa's down there. Japanese yen is actually looking good, and the dollar down. And what about Bitcoin? Bitcoin still where it is. We should also, you know what? I'm really interested in this MSTR thing. I'm not going to trade it, but wow, so the Black Friday sale on TradingView is up to 70% off this week only. Okay, let's see here. MSTR. So this was when they got, I guess I was a little bit incorrect that there was a fund stated that they were short MSTR, and that was this. They staged a little bit of a rally on Friday, and they are slightly higher in the overnight session now on MSTR. I'm just seeing everybody's talking about that. Everybody's talking about MSTR. It is the big one right now. So I'm gonna keep an eye on that. All right, so let's figure out what the deal is with this light. Why the light's not turning on? That's too bright. But good. Okay. Now my water. Oh, you're right. I muted. Sorry. I was just like realizing, okay, I don't know if I did all of my reading here this morning, so I was checking on a couple of things. Some of the sources that I was kind of looking at are kind of suggesting that the reason the treasuries are up is because of Donald Trump's pick for Treasury Secretary, which seems kind of silly to me, but I think that could be a reasonable theory. So I'm very interested as to why Octavius wants to sell it. I know I'm always looking for the trend to continue, I don't really know if I have anything to say that it should buy or it should sell. I would say that our inventory cost basis says that this price is a little stretched. That's for sure. Actually, that's really interesting. Does this give us a sell? You know what? I'm gonna try it. This one's super speculative though, so I'm only gonna do like 2 contracts. Maybe even only 1. To 02. Okay, let me check here. It says posted in Discord. Easy Monday gap open trade off the open against the weekly point of control NZ and NZT. I see. It's not. So I mean, I'm not trashing your logic. I'm just saying I'm not a believer in that. It does seem stretched though. It does seem stretched. Man, S&P 500 has really taken off in the last 30 minutes too. That's interesting. Oh yes, okay, so a couple of other things I gotta check here. Like, no, I don't think I did everything that I'm supposed to. I didn't. Let me take care of this other thing. Yes. I only take gap trades on Monday morning. Really? Now I'm thinking about that. I'm like, are gaps more likely to get filled on Mondays? And I'm kind of thinking that they would probably be less likely to get filled on Mondays, you know? Hmm. It's a little curious. You know what, guys? The more that I think about this one, the more I'm kind of like, something ain't right here. So for starters, the liquidity in ZN looks really weird. Like they've got 2500s here, and then there's like 4,000, 5,000, 4,000, 3,000 above us. And you don't have that on the other side on the bottom. Not at all. It looks like the 2-year wants to drag the curve down. The 5 is going at. I am seeing some flattening. There was some steepening this morning, so they might be coming out with that flattening. That's a good check. It's a good theory. FRFX Derivative Trader says, good morning, sir. Have you got the ES DOM on the screen? Yes, that is this right here. It's looking pretty bullish at the moment in ES. I don't know what that just kind of like popped out of nowhere. The book is super flighty, so grain of salt observations. No, you're right. But something's off, right? I mean, you guys can see it too. Something's off. Is it maybe partly because this is Thanksgiving week? So we probably need to factor that in, don't we? And I will be here on Black Friday. Sometimes I'm not, but this year I ain't buying nothing. So we'll be here for Black Friday. So because of the way that this is behaving, I am going to increase my profit here a little bit. Okay, so I'm going to check a video, a little edit of our video that we're supposed to be putting out today. I'm just gonna do that over here, yeah. Who is Scott? I have no clue. Where are you asking me random questions like that? Oh, he's the Treasury Secretary. Yes. Well, we could read a little bit about it. I've never heard of him. I never heard of him. President-elect Trump nominated Scott Bessent to serve as Treasury Department Secretary once he returns to the White House in January. In a statement on Friday, Trump highlighted Bessent's expertise. I am most pleased to nominate Scott Bessent to serve as the 79th Secretary of the Treasury of the United States, he said. Scott is widely respected as one of the world's foremost international investors and geopolitical economic strategists. Scott's story is that of the American dream. Blah, 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 blah. I seem to recall there being some controversy that, like, he worked for Soros or something like that. He was a key economic policy advisor and fundraiser for the Trump campaign. He's been supportive of Trump's plan to reduce regulations on cryptocurrencies and digital assets. The cryptocurrency thing is really frankly hilarious to me. So, like, okay, you don't like some of the decisions that they made, like that they limited the ETFs. It was hard to do the ETFs. Okay. You can't do initial coin offerings without, submitting all of the proper things, right? Like, they're acting like, oh, cryptocurrency has been so prosecuted during this past administration. The reality is that they didn't really do anything, and the regulatory agencies just enforced the rules that were on the books. It's like when you dig into it, like, really what they're mad about is that the regulators didn't allow cryptocurrency people to commit fraud. Like, that's really what it is. So like going all in on this crypto thing is like, I think a huge misunderstanding on their part about, like, what's been actually going on and what is going on. Because if they really, like, in a major way, like, reduce the regulations on cryptocurrencies, you're basically saying, oh, we're not going to regulate cryptocurrencies as much as we do other traditional markets because they're cryptocurrencies or something. I don't know. Like, it's just crazy. And then the whole time, this thing is propped up by fraud. It is. But Tether is committing fraud. They are acting like a bank. They are printing money. They do not all of the Tether is backed by dollars. If everybody tried to pull their dollars out of Tether right now, they could not do it because it is a bank. And they lend to people. So I really don't like this push that they're making. And like, meanwhile, like, the place where, like, the real problems are, they're not going to do anything. Right? Like, okay, are you going to rework the regulations at the SEC and everything so that we're not, investors aren't being, having their order flow sold away and all of... No, they're not going to touch that. I mean, they kind of changed that, but I haven't heard any talk about anything like that. Or, like, protecting investors from the fraud that has been out there, because it's out there. Aha. Okay, question on one of your indicators. The level 2 change, which levels is that checking? Is that considering level 0 or it's everything? It's everything. But the options that you have allow you to filter it. So if I come in here to my indicators, because I got it on the chart. Let's talk about this one today. You know, I want to talk about the indicators in a little bit more detail. So like, here's a great opportunity to do it. So level 2 changes, basically every time that something changes in the level 2, it counts as an event, and that's what it's counting, is the total number of level 2 changes. So when you come into the settings, you can tell it to only count bids or only count offers. You can also have a min and max filter. That would basically means it will only count if it's an order of a certain size or under a certain size. So if you put a max filter, then it would only show you events less than, you know, if I put 50, it would only show you changes in the level 2 that were less than 50. So that would only be the small lots changing, right? And then there is the level filter, and that will limit how many prices away it is, because you might be seeing a lot of changes in something that's like 64 levels away and you don't care about those, right? So then you might set the level filter to say, I only care about the inside 3 most levels, right? And the way that another thing that I would point out here in the plots. So I forget what the default is, but I really like to show the total. I just like to see the total number of events that are happening. You can also have it show, okay, you know, only show me the stacking, only show me the pulling, or show me the difference between the two of them, right? But I find that the total is the thing that is the most interesting to me, because you will often see like big spikes in level 2 activity that, you know, kind of are in front of major changes in price. So like a big spike in level 2 changes can kind of predict, and I can't say it's going to be a reversal or a continuation, like which of those two it's going to be. So you still kind of have to know like which direction it's going, but it's like a really big signal to like start paying attention. Okay, so yeah, I really like that indicator. In fact, I had a strategy for a while that was based just purely on the level 2 changes indicator. It did okay for a while. You're interested to understand when orders are pulled. Yes, so then you would want to do the level 2 changes and only show the pulling plot. You might also, on that one, want to look at, well, would it be resting orders filtered? Yeah, I think that level 2 changes is probably the one that would give you the best feedback. So I have looked at that in the past, and the thing that I have found is that you will tend to see more polling in front of whatever direction we're going. So if we're going down, then you're going to see more polling on the bids than on the offers, vice versa. So the market makers kind of see which way the market orders are going and kind of get out of the way of them. There's too many. But I also think that the reason why probably you see that kind of stat is that a lot of the price movement, at least in the treasuries, is just because of arbitrage with the related instruments. So those bids and offers are just pulling because the related instrument changed and they're adjusting their best bid, best offer based on that. How do I get the exact same DOM on NinjaTrader, sir, please? Because I trade footprint charts, but I would love the DOM on the side. Unfortunately, you can't. Yeah, the DOM in NinjaTrader is just not very good. It's just not very good, and you can't really make it look like this. The big failing of the NinjaTrader DOM is that there's so much wasted space on it, right? This DOM is just the columns, you know, but their DOM, there's like this big gap and all. You can see, where is it? New static super DOM. You know, I'm only showing 3 columns here, and like, what's with all of this space here, and all of this space here, and all of this, and yeah, there's just, it's not as good. So if you really want to trade on the DOM, I highly recommend getting Jigsaw. So I have an affiliate link in the video description for. Oh, actually, you know what? I totally forgot. I gotta come and look at this, because I got like better discount codes for you, actually. So almost got filled on that 06, but it popped back up a little bit. So it is a software. Well, yeah. So Jigsaw is a different different software platform, but it was actually broke off from NinjaTrader, so it works with NinjaTrader really well. For instance, there's like a little pipe that you add into your NinjaTrader market analyzer columns, and then it will send the data over to Jigsaw DOMs, so that you don't have to have 2 connections. Where are the coupons? So the way that this was set up was kind of confusing to me before. Oh, there it is. Oh, I think I see what's going on here. How do you grab the link? That's so weird that it's set up like that. Okay, whatever. Whatever, guys. Let's see what this looks like. I think I have to open it up in a private window. Okay. Man, I'm not a huge fan of the way that it's working right now. Maybe I should have just taken the one take. I don't know. There you go. Oh, so Okay, so that's $100 off of Day Trader Independent. I thought that $100 off would come closer to 400, but maybe they've increased the price a little bit. I don't know. But I'll put that in here. $100 off. And if you want the bigger ones, then you can get even more off, like the live trading subscription. So if you want to buy Jigsaw, just ask me for the, I mean, I have like the link in the video description, but for this week, come and ask me. I can give them to you. If you want the other ones. I'll put that one in there. The other ones for, like, you know, if you want to get, there's like different packages and that include different education in them. So if you wanted to get the bigger education practice, or you wanted the live trading subscription. Actually, I can do the live trading subscription one because I think there's some. That's this one right here. No, I'm gonna. Yeah, weird. Oh wait. Oh, I know why. I know why. Okay. Or does it work like try by independent, professional, institutional? No, where do I get like journalistics and stuff? You know what, Jigsaw? You've made your pages a little bit confusing now to me. Yeah, that one that I gave you there in chat. Is for a day trader independent. Yeah, so let me show you. So when you buy Jigsaw, there are 3 different choices: independent, professional, and institutional. And the difference is that professional and institutional include additional order flow trading series. The professional one also has like they have like a monthly group thing. Okay. Yeah, but it's a lot more expensive. So the truth is that the vast majority of people just buy independent. And the education that comes with independent is really good. So that's what I would recommend, is just get independent. And if you use the link that I just gave you there in chat, it will give you $100 off. For some reason, I can't copy the link anymore. But oh, or I just opened it in the wrong window. There you go. Okay, so see here, $100 off. So yeah, if you really want to trade the DOM, I recommend using Jigsaw. So you got to remind me, guys, to bring that up and promote that. So thinking of it, because remember on Friday, people were asking me, "Hey, Seth, by the way, there's like a little dog here on the microphone. What's with that?" On Friday, for some reason, everybody was asking, "Hey, Seth, are you ever going to make like your own trading platform?" And I was like, "Oh yeah, I would really, really love to have my own trading platform." Well, oh, by the way, I think we should take the stop on that, huh? Stop being ADHD, Seth. On Friday, everybody was asking me, "Seth, you should just, you should make your own platform. You're a pretty good software developer and all these sorts of things." Like, yeah, except for that, I think they would probably take me 2 years and I don't have the funding to do that. But, I looked at things like getting funding and all of these other things. And there's some interesting things and some ways that we could go, like angel investors and things like that. But the more that I looked at it, the more I was like, oh, but really what we should be doing is we should just be working harder on the setup that we have. So one of the things that kind of always held me back with the indicator package here was that the primary reason that I had created them was so that I could do back tests. So we are now to the point where we can do back tests. I'm collecting data, and then we can do back tests, right? But I think that the indicators are really valuable, especially that inventory cost basis is a really valuable indicator. And really what I need to be doing now that it does the thing that was important is I just got to push it harder. Like I've got to focus on growing that. I need to take some of the money that we make from selling the indicators and do advertising and things like that now. So I'm thinking what I'm going to do. They sold Thinkorswim for $750 million, I bet. Yeah. For some reason, my thinking and my speaking here is a little bit disjointed. I apologize. I just have too many thoughts this morning. I always kind of held back with the indicators just because the main thing that I had created them to do was still kind of in progress. You couldn't back test with them. And so that was the big thing that was kind of holding me back. Now that works, and there are still some changes that I'm making to them. I think I'm going to work on it a little bit today to make it load up a little bit faster at the beginning. But they're really there. I think that the big advantage with the indicators is that you get really good access to me. If you want me to put something in the indicator package, as long as it's a good idea, we can absolutely put it in there, right? So I can make just about anything. One of the things is people will come in and are like, hey, would you make this for me or whatever the deal is? Well, there are some things that it's you don't want anybody else to have it. Then you could talk to me and I could maybe you could pay me to make that indicator or whatever. But if you're okay with everybody having it, just tell me and we'll put it in the indicator suite and I'll write it up. Right? So that's the advantage that you're getting with it, in addition to all the stuff that you already have. But what I'm going to do, I think, is at the beginning of the year, I'm going to increase the price. So right now, it's only $100 for a lifetime license. I'm going to change it to be more because we need to grow it and advertise it now. Wow, you have a friend that developed a trading platform and he makes about $10 million a year off of it? Wow, that's crazy. Well, I definitely want to do it. And I have some ideas. I would probably need $1 or $2 million to develop it in the first place. And there are some parts. Close this so that I can see what the rates are here. Or 3. I do have some videos talking about inventory cost basis. That's actually the first one that I was going to do. Remote? What do you mean, Anstuffa? You mean when we start making our own platform, you want to work for me and we'll do remote? Sure. And we think we can do that. Yeah. Yeah. I think that it probably would be a remote thing. Yeah. So, man, I have so many thoughts. So one of the things is that a lot of what I would want to do with my platform, okay, so what are some of the things that the platforms don't do very well that I would like to change? Okay, one is all of the things that are in my indicator suite, I feel like should be default with the platform. So the caching of data, the ability to save level 2 data, and better tools to manage the data that you're saving. And perhaps even plug into things like a data lake or something like that. Because really where this is getting at is providing a retail trader a platform where they can leverage data for AI, essentially, to do their own artificial intelligence. Okay. So that's one thing. Another thing that really bothers me about current platforms, though, is like the way that you manage windows and things like that. You know, like it really irks me. I come into here in NinjaTrader and like I can't manage it as a grid, right? Like if I want to resize this, I have to resize all 4 of these windows, and it's just a complete mess, right? I would want to fix that. I would want the platform to have better workspace management features, right? So that's a relatively complicated thing, especially if we want to do it in Rust, which I've never built a major platform in Rust, right? So one, we would need to find people that are Rust experts, right? And we would need to find people that are, know about trading and are interested in the trading. So I think that we probably would have to have like a remote team, probably. But in the meantime, my kind of taking, so I wrote this stuff down actually. I don't know, sometimes you can see this in the background in the videos, but I have like a little board. I used to have like the my daily activities and the things that I need to do. I would have them written on there because then it's like something in front of me and I can see it and it's physical, so you get a little bit more of that dopamine boost when you complete things and all of that. But I kind of found that I wasn't using it, and that I had gotten to the point where I was doing everything through my notes in Helix. That worked way better, right? So I decided to change this to be more goal oriented. So I've got, these are the major things that I'm working on my career side. There's some SRE books and stuff. I mean, I already know a lot about SRE, but there's some books to read. And I have some books to read about management stuff. Okay. But then our goals here on the stream, we want to have 2 videos a month. We want to make videos about the indicators themselves. And then we want to do some interviews or like collaborations with other creators. So, those are the things. And that doesn't include the programming part, right? The programming part is make the indicators better and promote the indicators. And I think that we'll actually buy like AdWord advertisements or something like that. No, okay. I know what it is. I'm sitting here and I'm like, no, I'm forgetting something. No, Gus asked, do you have a video talking about the inventory cost basis? I don't. I'm going to work on one. We can try a dry run here, shall we? So the inventory cost basis originated from a thread on futures.io. So I did not come up with the original concept. Somebody else did. But I do feel that there's a couple of things in the way that my indicator works that kind of pushes the concept further. I tried to work with the guy, but he kind of seemed like he was too interested in doing his own thing. And he made a similar thing in like ATAS or something like that. Okay. But how does it work? Basically, what you're doing is you're taking a footprint chart. Like a footprint will have like, all of the bids that took that were traded, and then like all of the offers that were traded, whatever. Right. And essentially what we're doing is think of it as like a model, two models. So one is what is the average position for the buyer and or for a mark. Let me back up. So you come in and you say, what if there was one market maker that was taking all of the fills. So every limit order that got filled on the buy side, we assume that that was all one person. And then we see, okay, what would like his average position be? Now, every time that he has an opportunity to take a profit, he does it. So you start at the bottom and you say, okay, so he took on 7 in inventory, right? But there was 8 here. So he was actually able to take off all of his inventory. Okay. So then he took on 6 in inventory. There was only 4 that he was able to take off, that he was able to take profits on. So he has 2 in inventory now. Now there's 5. So now he has 7 total in inventory, but to take 2 off. So he's got 2 total and 3. So in this scenario, the buyer would have 3 in inventory, right? And then you do it on the other side. You say the seller, okay, so he has 3 in inventory and he takes 5 off. So that takes all of them off. So that's a 0. He has 4 in inventory. And he's able to take all of those off as well. So that's 0. And then he has 8 in inventory and he's able to take 7 off. So the seller has 1 in inventory. Okay. And then what we do is we look at, okay, every time that he took profits, how much has he actually made in profits? So how much has he made in profits? And how much inventory does he have on right now? And based on those numbers, what would be the price that given their current inventory, that things could move to where they would be screwed, essentially, right? Like they wouldn't be making money anymore, essentially. And that's where those lines come from, okay? So when you come to the inventory cost basis, and we'll make this big. And I think that today, here in Xi'an at least, is a bad example because we're like way past it. So it's basically saying the buyer, the guy that's taking on contracts long, his average position is here, and he's losing money, or rather the one that's making money short, he's from here, and his break-even point is this line right here. So when we started out, we were really far above that line, and that's why I was kind of like, this seems a little bit stretched. But we were wrong. We were wrong on that one, and it looks like the trade is up. So that's where there's the flaw in the inventory cost basis. Okay, just keep this in mind, is that if they stop out, right? Like you're taking on inventory and you're like, no, this is bad, I'm gonna puke it all, right? We can't see that. How would we know when they're doing that, right? So that's the one weakness in this. So this indicator is not very good when we are in a trending market like we are today. But if you come back and you look at days past, so if we come to Friday, yeah. So when you come in to Friday, when we aren't getting a trend, and then you will find that the market tends to respect these lines really carefully. Okay. So when the market maker is in charge, use these lines. When we're trending like we are today, they tend to just ride this line the whole way. So they're actually, like, for them to be this far above it is quite unusual. I still think that, well, I don't know where it would be, but, you know, I think you could probably still make the case for, like, a hero trade that is going to come back. But that's a risky trade. I already tried that one and took the loss on it and wasn't paying enough attention, so. How much, by the way, are we buying here? So do you have any questions about what I just told you there on the inventory cost basis? Did that make sense? Or was I like too ADHD there? Well, no surprise. I maybe it's just because I had so much going on this morning. So like, oh my gosh, we're having trouble getting the kids to go to sleep, and Asher didn't go to sleep until like 1 o'clock on Saturday night, and then he slept all through church, which was crazy. Like we just had him, and he was just sleeping on us at church the whole day, and then of course he didn't want to go to sleep last night either. And my wife thought that Ethan, the younger one, did fall asleep, so she brought him up and left him in the bed. But then he kept waking up and getting out of the bed and like trying to find mom, I think. So that woke me up like twice. And my wife, she never came back to bed. So like you can tell, and it's like something's wrong, and I don't sleep as well because of that. But she fell asleep with Asher downstairs, which is just terrible for her. But so we got to let her sleep today. And then so like Everett has to be taken to school, so I had to go and drive him before we did this. And then we're trying to get a video together. And I wanted to be putting it out like right now at this very moment, but it's not quite ready. But we'll still put it out today. So I think that it's just the combination of all of these things that's got me disjointed. But I feel like that I start going down a path like, okay, I want to talk about this, and then I'm all over the place. So whatever. But the point of telling it to you, because I want to turn that into a video, the point of telling that to you now is to understand where what I said maybe was not clear, so that when I make the actual video, we can make it make more sense. Of course, when you do the video, I will be selecting times when the market is range bound, and it works better, right? To show you those. I guess one other thing I might say with the inventory cost basis as it pertains to the treasuries is that the lines will be different for all of the instruments. And you might find one instrument where it seems to be making more sense. Like, do you see here where in the treasury, okay, like we're way above the line in the treasury, but we're right at the line in the 5-year. So it is the short end of the curve and steepening that appears to be moving this market. Okay, so I just heard over the news squawk some discussion in the UK about stationing troops in Ukraine. Yeah, Gus. The cost basis is the average price at which a market maker has acquired their inventory. Yes. Oh, wait, is that from my documentation? Yeah, okay, Uzi repasting that. UK and France are reportedly in talks about deploying British and French troops to Ukraine. Transcript from my video. Oh, because I do have a video about it, don't I? I think I have a video about all of the indicators, though, and I want to redo it and just have one-off videos about each of the individual ones. Because, like, nobody watched that video. I want to make them about the individual ones so that people can see. Be like, oh, this is really good. I want to buy this indicator suit, right? Okay, so on the Ukraine thing, I just want to put a little bit of caution on that, because you might be thinking, oh, this is really bad. This is going to be like all-out war. But them stationing troops in Ukraine does not necessarily mean that those troops would be in harm's way or that they would be involved in combat. Or technically, as I understand it, the United States already has some troops in Ukraine for doing like training and things like that, right? So this is a headline that I think has a high probability of being deceptive. right? I mean, you know, if you know anything, you know NATO already has troops there doing fighting. Yeah, they're just not official deployments, yes. So I don't know what the nature of this discussion that they're having actually is. Does not mean that World War III is starting. If that was the case, if this was, you know, okay, let's say alternate headline. Let's say that the headline was France declares war on Ukraine, right? I think that you would be seeing treasuries buying and the equities selling, but you're not seeing that. The market seems to be ignoring it. So that's kind of my take on that one. World War III done been started. We just think it's going to be like World War II. And given technology, there's literally no reason for it to be. Well, we don't really have full open conflicts like we did in World War II. You have proxy wars, right? But what's happening in the modern times is really even more an information technology and economic war. So we are definitely, make no doubt about it, we are in an economic war with China. We straight up we are. Which is why it's so crazy that there's all these people, you know, saying, no, just let China do whatever they want. Cyber warfare, yeah. Now that one is still kind of like the prelude to war. With Russia, that's like full-on open conflict. Economic war. Unfortunately, our economic weapons did not work that well against Russia because Russia is quite self-sufficient. So that's one of the concerns I have here. Like, okay, so if we get into a trade war with China again, you know, they didn't really throw their biggest punches. And there were some things that people were talking about and were worried about that, well, we're kind of like, they're not, you know, like, but we were all concerned that what if China dumps all of their treasuries? Well, they would be really dumb for them to do that. Since then, they've reduced their buying. Has had an effect on things for sure. Okay. What am I worried about? I'm worried that China would put a stop on all rare earth mineral exports. If China came in and put a stop to all rare earth mineral exports, that would be a pretty devastating hit to the United States. Like the number of things that we make, including like stuff in military weapons that rely on these rare earth minerals, it's insane. So we, the United States, are not self-sufficient anymore. We don't have a lot of manufacturing. We don't have the ability to mine and process rare earth minerals. In fact, we have some regulations that with current technology makes it very difficult. We have one company that is creating a new way to mine rare earth minerals, and it's taking forever and ever and ever for them to, like, you know, run through the trial plant and do all of that. Bill Clinton said bringing China in the Trans-Pacific Trade Agreement was one thing he regrets. Yeah, well, I mean, like, I don't think that more trade with China would be such a big deal if China played by the rules, you know? But I don't really feel like you can trust them. China's all over Africa and they're busy colonizing. Yep. It's a future investment by them. We'll see how that works. but we didn't really think it through. We didn't have very good. The globalist position was more trade is better for everyone. End of story. And that's naive. Yeah, yes, more trade is good, but everybody needs to play by the rules. And if you have certain actors not playing by the rules, then it can hurt certain groups. And that's what's happened is we exported all of that industry over to China, and then all of these people have like this monetary incentive to do it, and they shelled out like important industries in the United States. And you get these people in politics that are like, well, but you don't want to work manufacturing jobs. Somebody in the United States has to work manufacturing jobs, guys. You have to be self-sufficient on those things. They're doing what the West did for the last 700 years. I don't think they'll ever hit the point of regret and social cultural self-deletion like the West has, though. What's Elon Musk talking about here? Oh, no. That's anything to worry about. I don't know. Like, it's not all... China has its own set of problems, okay? So... But there is a war of sorts kind of going on under the scenes that everybody's kind of naively overlooking. Yeah. Now, the split side of this, something is that, you know, like Tucker Carlson is talking about this, that like, hey, the United States authorized the use of longer range missile systems and things like that. And Tucker Carlson is like, oh, this is just absolutely evil because they're trying to like deepen the war just before Donald Trump gets in office and all of those sorts of things. I think that he's probably overreacting and misunderstanding the situation. The reality is that the whole like, can we use missiles thing has been like an ongoing discussion since the war began, and is not just something that you do in a day, and has probably been like in the works for a long time and just kind of happened to come out at this point. And the missiles that we're talking about aren't that long range and really only able to take out legitimate military assets. And so I really don't think that allowing Ukraine to use those missiles really changes a whole lot of anything on the ground there. So the market over the past week or two has kind of been showing a lot of reactions to this, and kind of like that the market is upset or concerned about what's going on in Ukraine. And I'm saying I don't think anything has actually changed. So we are at, it does look like we're at like a resting. So we had, you know, we want to think of these as meta orders. So there's a big meta order. And here's a big meta order. Actually, it's going to be more like this. Okay. So there could be a third leg. Bill Clinton might also regret giving North Korea all that money to stop weapon production. I don't know anything about that. I tell you what, North Korea is really crazy, man. I'm still kind of on the theory that like Kim Jong-un and other people in North Korea do want to stand down, and the military complex in North Korea is just become so strong that not even the leader can stop it now. Is it true that North Korea is sitting on 7 tons of rare earth minerals? I would think that if they had that they would be using it. Saw a picture of an allegedly dead North Korean soldier in Ukraine, and I couldn't help but feel bad for the fact that they have to wear a giant patch with Kim Jong-un's fat smiling face on it. Yeah, I can't help but think that this is a huge tactical error on, or let's not tactical, strategic. I can't help but feel that North Korea is making a massive strategic mistake with sending troops to Ukraine. Because one, they're using manpower, right? And like, if any of those people survive, what are they going to do with them when they come back? Because they'll have seen life outside of North Korea. Like, those soldiers are not going to be like, that's the sort of the thing that leads to your government being overthrown, you know? 7 trillion. Yeah, but again, why does North Korea not have any of those operations? Surely China and Russia could help them with the equipment and everything. There must be more to it than that. Seen a little bit of like oil was careening down and then it reversed. I kind of missed that. Bitcoin's taken a bit of a hit too. Hard to decipher what's really going on here today, guys. I would say that the liquidity in the 10-year still looks really weird to me too. There has been a decent amount of volume that's traded up in this area, so that has kind of shifted our cost basis lines to more reasonable levels now. Easy day for me. Oh, what did you do live action? Did you just take it along? I don't know. I took like a sim trade, but that wasn't that was a terrible trade. Like there wasn't like I had any idea what the flows were going to be or anything like that. I just kind of wanted to mess with it. Like, okay, it does seem like it's a little bit stretched. So does this end up being a good place? I guess the answer is no. I guess the answer is no. It seems to me that to find a good place to reverse, that you have to have a reason to think that the flow is going to reverse. Some fundamental reason to think the flow is going to reverse. Excellent. Somebody wants me to... Let's see here. I would have liked to seen a pullback to VWAP before the next leg. No, well, I mean, it did its settle thing. That if somebody's really, there's really going to be a third leg, I don't know why they would wait for VWAP. I was wondering, you know, I can do it with a tick replay. Maybe I should pull out the backtests for inventory cost basis. And I was thinking, okay, because I think I did have one where it was like, if you went past the stop zone and then came back, was it like it was going to come back to the line? But the one that's more interesting is it comes back to the line and it bounces off, right? And I don't know if I backtested that, but the way that I should backtest it is, okay, you take the trade and then you hold it open for 30 minutes. What does it do? To see if there's, that would be a better way to see if there's a statistical aberration in it, right? And we could do the same with VWAP. Okay, I'm gonna just make some notes here really quick. The replay on my system, I have issues with the order flow, so that is why I wish you have your ladders fill top to bottom for review. What do you mean by that? Fill top to bottom? Oh, the whole, you mean the whole screen. You want to see them for the whole screen? You really care that much about what happens like 32 prices away, though? Sometimes I think about adding another monitor. Like, I've thought about having a monitor that is really more for you guys. Yes and yes. Just can't. So like, my indicators will pull statistics out for you that far out, and it's mostly just robots, right? Like, there's things that the robots do that are standard things, and like, I never find aberrations in those, and the ones that are like really far out. Have a delta volume on my that can be useful. By the way, something I've been talking about is like this resting orders V2, that it is a little bit different. So with this one right here, this one aggregates it on like a per level basis. It says how much stacks or pulls per level. This one aggregates it all together across everything and then sees what's the max and min during that period of everything. It's a little bit more complicated of a calculation. And then I've also filtered it so that we're only using the first 10 levels. Okay. So look at this point right here. Do you see what I'm talking about? Right there. When there are changes in this resting orders filtered, it tends to happen at key pivot points, key changes. In this case, a continuation. Whether it's a continuation or a reversal, who knows, but it seems to catch these, that like there's a change in the market depth. Oil coming down a little bit. I'm hearing stuff about Lebanon ceasefire. Why would you want it as a vertical histogram? Like you want it as per price? Because I think I do have that, actually. So here's one that is in the suite, and I just never use it now. Hold on. I haven't put this one. I'm almost afraid to put it on there. I'm like, I haven't used this one in a while, but do I trust myself, right? So what is it called though? It's like summary or something. Yeah, summary rows. There you go. Oh, wait, that's not it. Summary rows is not what we wanted. Do I include that one? I don't think I do. That's not the one that I want. Oh, maybe it is alpha. Yeah, it is. There you go. Yeah. So, let's see here. I guess it's not a histogram, right? Have to come in the editor and look at which one is first. That's funny. Okay, so that's why I never used that. Oh, Summer Rose is alpha too, but for some reason it's not. Okay. Okay, it's current max min. So this first number is what it is currently. This next number is the highest that it's ever been. This last one should be the minimum that it's ever been, but that can't be right because... So it looks like that there's some sort of a... It's, you know, it doesn't completely work correctly. But is that kind of what you mean? You know, one of the issues that I constantly come back to is like, okay, there's like a trillion different ways that we could show you data, right? Why? Oh, you know what? This is the min and this is current. Oh, that's interesting. Why do I have it this way? This one's current and this one's min and max. No, that can't be right either. I don't know how it is. Delta, no, you just want the difference in volume delta, but you can just do that with candles. You can just do that with a footprint chart. They have a volume profile of a ladder and a delta volume is attached to the other side. So, yeah. Like this. We can come in here, I think. And we can put ZN on. Footprint. Turn off tilt mode. Change the histogram style to delta. There you go. Change, let's see here. Change the interval to be more like a 30-minute bar, right? There you go. There you go. Delta like that. It's like, I don't really think that tells you anything. guess if you're moving up, you should tend to see imbalances in favor of the buyers, right? It's on your ladder. Well, yeah, you can edit on the ladder too. You can edit like says no. So there's like these bid and ask snapshot columns. I don't think that there's a delta one, but But the whole thing is what is the theory as to why it would matter, right? Because all of these ones that they came through, like there was this either a research or a theory that we had about why we wanted to see that. Like it is a bit of, okay, now that you have the ability to see the data, you got to go and see if it, like, you can actually get something out of it. But I don't see, you know, there's like a trillion different ways that I could organize it, and why would we spend time on one versus another, right? The Motive Wave platform. Yeah, that one just shows you a delta difference on the volume. There's a volume profile that's just delta, right? Yeah. But I really don't think that tells you anything, to be honest with you. So like here's the whole thing. Let me get to a deeper thing here. Footprint charts. The way that people use footprint charts, I really don't think provides any value. I really don't think that the way that people do footprint charts really adds any value. Yeah, well, because let me just come back and change this one to like, so I have it set to a delta, right? Let's change the histogram to your basic volume profile, I think it is. Or maybe, is it volume profile graded? I don't like that one either. I like it where they come from the center. There we go. Okay. So like the way that these people typically work with the volume profile here, right, is they'll come in and they'll look at this and they'll be like, oh, when I look at this particular price, there's like 3,000 versus 2,000. So that's like a big imbalance between the two. So maybe I want to buy here. Or there's another what do we say, school of thought that says you need to do it diagonally. That's why Jigsaw has this diagonal version of it, right? So then when we do it diagonally, we say, oh, there's like a huge sell here versus a relatively minor buy at that price, right? And the issue is that stuff happens across multiple prices. The reality is that the really big players, the people that are really going to be the determinants of if we move outside of this range or not, are very price agnostic. And they aren't looking at it being like, well, we have to buy it at this particular price. And yeah, in fact, they very much don't want to do it in one spot. Anything that like would like be a trigger or a signal to anyone, they're just going to do it randomly with, you know, within that area or over that time period. And so, you know, it basically making a big deal over the volume that traded at one price versus another price one tick up does not provide any value. There's no predictive information in that. Or rather, there's no reason for us to believe that there would be any predictive information in that. And there are things about the market that we do know that would kind of suggest that that information would be very unlikely to have predictive information in it. And I guess, like, when you really get down to it, is something spooking the market here? I don't know. No, I don't see anything. Although the S&P 500 is coming down pretty hard. But the only thing that I'm hearing about is Lebanon. That might be why oil came down. So yeah, footprint charts is, to me, footprint charts are just another way to perform technical analysis, and perform technical analysis that's most people don't have the data to backtest to prove that it doesn't really do anything, right? Like, the only thing that I have that really tells you anything about an individual price is the inventory cost basis. And like I said, when we're in a trending market, tends not to be a very good indicator, right? Inventory cost basis is only going to matter when the market maker is in charge, and they're not today. So you extend that to all of these other forms of analysis, and you kind of start to realize that a lot of these things that people are concerned about don't really help you. Like, if I come in here and I'm watching the DOM and I see a really big order stack somewhere, that might be a signal to me. If we tick down and it immediately stacks behind it, that's usually a pretty strong signal to us. But it doesn't matter that it happened at 11.5. It matters that it happened on the inside offer. And the exact price that it happened, it doesn't matter. And I think that everybody kind of came up with these ideas because they thought that, oh, like, the price matters. Like, it is a market, and then it comes like this, and there's support and resistance, and they care about these price levels. So when we get to here, I should see, like, more people selling it, and when I get to here, I should see more people buying it, and there should be signs here that this is support and resistance. And the reality is actually that when we're in a range like this, they're just ranging based on a correlated instrument. So most of the time in a move like this, what do you see happening in cumulative delta here? You'd see cumulative delta still going down, but just not as fast, right? And why does this range form? Because when they get there, the buying or the selling stops. They're gonna sell it, and then they're gonna stop, let it come back up, sell it, stop, let it come back up. Because it's the correlation that's causing that range. Okay, so really, we're looking for this thing right here. How do you know that this thing is going to come? Well, you have to know, like, why. Why are they selling it, and know enough about why to be able to predict that they're going to do it that day. And this guy, he doesn't look at it like, are we at 13 or 8 or no, he doesn't. He just waits long enough for the book to recover, and then he trades where it is. Because he's going to move the market so much. Yeah, okay. Anecdotal evidence. Yeah. So it's still like, I mean, it's all data, right? Like so like, I don't like technical analysis, but to me, technical analysis is the analysis of past price movements. Okay, the analysis of past price movements is ineffective on a intraday basis at predicting future price movements. Okay, with at least with any kind of risk adjusted efficacy. Right. So that's technical analysis to me. Quantitative analysis, though, like totally good. Any kind of data that we can look at and we can come in and sift through and find aberrations in the market. And absolutely, when it comes to the sign of like whether market orders are buy and sell, and what the limit orders are doing, we can find statistical aberrations in those that might be able to help us with our trading. But like, the question is where are we can look? And I'm suggesting that if the premise of it is something's been happening at this price today consistently, is probably not a very good theory. Frankly, I don't think that we're going to get a third leg, by the way. How are we getting a flight to safety but gold dumping? That's a good question. I don't know if what's going on in the treasuries is actually a flight to safety trade, though. I think that the biggest flow that I know of at the moment is people buying the treasuries because of the anticipated Treasury Secretary that Trump has hired. I think that's why treasuries are up today. I don't really have anything for any other known flows, right? That would be leading to treasuries buying. Like the Lebanon thing, that's a de-escalation there. And the Ukraine thing, we were moving up long before we had that. So I don't think it's that. There was no reaction when the Ukraine thing came out. So but overall, it also just seems to me that probably because it's Thanksgiving week, we've just got a really weird market. The liquidity in ZN is not normal. ES had like a really unusual boost at the beginning of the session and is now just getting absolutely creamed for no apparent reason. How about MSTR? Oh, MSTR took it on the nose right off of the open. Yeah, the Treasury Secretary pick is all over the news. But to me, like, why is that like a good investment thesis, though? You know, like, I don't. Whatever. I think the trade is okay. It's somebody reasonably competent, so that must mean that treasuries will be okay. That's all I can see. Why is MSTR being shown to me in terms of price percentages, by the way? Yeah, oh well, whatever. That's a 10% drop on the day, though, isn't it? That's pretty crazy. No, he's trading. Well, I mean, I'm long the TLT play now. It's kind of funny. I don't know. Should I be more proud of this than I am, or is this like gonna blow up in my face eventually? So I remember talking about this when we were like way over here. And I was like, does it? I'm not sure this makes sense. This one in particular. This move right here. I really, this area, I was really like, this doesn't make much sense. This does not make much sense. And then on the flip side, this whole thing right here, I was also kind of like, like really? Okay, like okay, so most of this was the election. So I think that election day was like somewhere right here, right? Okay. And then they just kept selling it after the election. I was like, nah, this doesn't make sense. So I bought it basically here. I feel like that's a pretty darn good play. I should use their arrow. I bought it right there. I'm up like let's see how much. I think I'm up 2% now. It's just like, why would you want this area? I guess if you're cost averaging it and everything, but earlier I just didn't really understand the thesis of like why here is a good time to buy and why here is a good time to sell. But now I do. Now it's like, okay, well, they sold it really hard because of the election, but the economy's hurting and they are reducing interest rates. So this selling action is probably temporary thing that eventually is going to come back out. And so far it has. And when you look at it, come back to this chart again. So I guess now we're kind of doing technical analysis, but like, you know what stands out to me is just today, the way that bar just has shot out there. And like, for what? Like, why? There's not really anything super huge going on or anything. The Treasury Secretary, that's it? Okay, whatever. But like, when we look back on this chart in 5 years, we're going to look at this candle probably. The TA guys are going to look at that candle specifically to be like, oh, that is where the uptrend started. And they probably won't even remember that it was up that day because of the Treasury Secretary. You know? Should we have a leg up? Well, from where I'm sitting, it really looks to me like the Treasury's died. Like when you get this thing, man. Right. So the way that it tends to go is back one. Okay. So are we gonna get well? It's been doing this for over an hour now, right? So typically another leg will happen 30 to 50 minutes. So we're already past that time period. So the chances of there being another leg up are actually low, I would say, unfortunately. What's most likely to happen now is that the market makers just start to inject liquidity and it just starts to do this the rest of the day. Sorry, they'll inject a little bit of randomness, so it's gonna be all over the place. But once they're able to get out of this hole and move freely again, it's probably going to be random in a random range. So I'm not anticipating that they make another move. But you never know. Sometimes later in the day, stuff can happen. So. But I personally don't see a good case for it. I'm almost up. Well, it's 2.86%. Granted, that's only like $30, but still. That's pretty decent for a swing in TLT. Granted, I'm anticipating making more like 50% on that in the long run, but we'll see. We'll see what it does. Wait, so I miss. Where am I? Do we have no, okay, I was answering that one. Paul, I'm in another live of a YouTube creator who likes to gamble. On his 2 loss just now today, and on his 3rd right now. Always fun. Huh. I've certainly had worse than that, right? And Uzi, how's that TLT trade going for you? I don't know if that was asking me. 2.83%. I'm in TLT at 89.61. I'm in at 89.61. It's at 92. So I am up 2.88%. Octavia says, I'm stuck in the hole. I saw size at 14 plus we were above the initial balance high, so I took a shot. Well, we are starting to get this a little bit of a range here. It's only like 4 ticks, but it is starting to do it. That doesn't mean like another leg up, but you know, like you're stuck in the hole, you just want 1 or 2 ticks, whatever, like whatever, right? Should be able to get it. Bitcoin took a pretty good hit this morning, but they're bouncing now off of 96,000. You have Jedi mind, Jedi TLT mind ability. So I was going to put a video out today, and now I'm wondering, like, maybe I shouldn't do it because it's Thanksgiving week. I don't know. I kind of think I still want to put it out. I don't think that it will matter. I'm still waiting for him. I guess another thing I would point out is like on our level 2 activity here, right? Remember, we saw a little shift there, but since that time, not really anything. Nor are we getting really any big changes in the large resting orders or anything. Overall level 2 activity, as I would say, coming down. Or actually, let me draw like this, right? You had some activity there. You know, there's still a chance. I mean, there's always a chance that a big buyer will just come in, right? But the market data is not giving us any indication of that. So it's just going to come out of nowhere if it happens. The indices are starting to look a little heavy. Well, I mean, don't you think that it's already kind of been like? I mean, look at this one. Jeez. Look at this chart. Yeah, they got creamed there. Yep. Yeah. I guess it could go for more. But I kind of feel like that the move's already happened in ES. I guess there's enough of a gap here. Maybe they do. Maybe they try and cover that gap. You think? Maybe. I don't think that gaps are really a very good predictor or anything, but it is a thing. People do look for that. I still had this portfolio up, and I was looking at it, and some of the numbers that it shows me on this summary look really amazing, but they're just kind of like meh. The one that's still funny to me is Goldman Sachs, because I remember when we first got that, and I was like, oh yeah, I think this will probably go to, they'll meet the all-time high again, and just keep going, and this is actually like a really good place to get a bank at, right? And some people were like, oh, I hope that happens, but I don't know if I can wait that long, blah blah blah. And now it's up 3 times that. It really is just like, for most stocks, if you hold it long enough, assuming that there's not something rotten about the company, But then I have the money that I put into the market index for the Roth IRA, and that's up a good 30%. Because whenever I put that in there, look, I tell you what, man, okay, so we were having this conversation yesterday. This is a stupid conversation, okay? But she was watching some Christmas Hallmark type of movie. It was made by Netflix, but it was like a Hallmark quality kind of time or storyline. Oh my gosh. And the movie started out with like, she's a dancer and they're doing this Christmas dance or something like that. And the Christmas dance that they're doing is just like the cheesiest, dumbest thing you can think of. Like, it's like she's getting paid professionally to do that? What? That makes zero sense. Anyway, it's not like they're doing the Nutcracker or anything, right? Anyways, and they were talking about like, oh, the girl, she doesn't have as big of boobs. And I was like, yeah, because they're trying to make her look rich. And like, what? They hadn't heard of this before. It's not that rich women have smaller boobs. It's that rich men prefer smaller boobs. Like, now granted, the study that this comes from, it's pretty, it's pretty iffy. So it may probably not actually a thing. But it's the thing that people talk about. Oh, we are having another leg here, are we? Okay. Is coming out of nowhere. Let's see how far they get. Do you think they get 16? I'm not going to jump on it. I'm just going to watch it. Anyways, so like the poorer a man is, the more that they prefer large breasts. Was what this one study said. Right? And they're like, no, that's not the thing. And I'm like, haven't you seen all these girls on TikTok talking about how to make their chest not be as prominent and things like that? Like, it's there. Like, I see it all the time. It's totally a thing. And they're like, no, it's not. No, it's because you guys just don't have any kind of class consciousness whatsoever. You could be standing next to a billionaire and you wouldn't know. You wouldn't know any of the things that would key you off to that they're a billionaire, right? They're just she grew up in the country in a working class area, and she does not understand the differences in culture at all. At all. So, and the differences in mindset. So whenever we're trying to put the kids to sleep, when we're driving around and there's like these big houses, and it's like, oh, we'll never be able to afford a house like that, and you're never gonna be able to go anywhere, and I just feel like I'm digging in and not going anywhere, and it's like, no, you just got to be patient. Like, come on, you put all of this money into your IRA, and it's already made $3,000. You didn't do a thing. $3,000 is a lot. Relatively speaking, is a lot. And you did nothing. It's just sitting there. You didn't even I didn't even put it into, like, it's not like, oh, I was really good, I picked the right stock and that really blew up, and yet no, because if you do that, you could literally become a millionaire from that. No, all we did was put it in an index fund. Come on, that's great. And so whenever she's getting down like that, that's what I try and show her. It's like, okay, yeah, but our IRA is up $3,000. I was doing some weird things here at 14 too. I'm a little bit suspicious about this now. Well, I'm not gonna try and predict it because I don't know what's going on here, right? I don't have any kind of predictor of order flow here today that tells me that they got to keep buying. There's gonna be another leg, or I'm not seeing the S&P 500 falling, or really anything really moving correlated with it. So I'm not going to try and get ahead of it or anything. But I am a little bit skeptical of it here in this, suspicious of it here in this location. Any thumbnail ideas? I don't know. a second leg, but it's ugly. Well, maybe. I don't know. So, man, you know what? The issue that I'm having here today, you know what I think it is that like I'm starting to think more and more about like, okay, so like, what if we were to clip this and make it a YouTube short? And am I saying things in a way that like, because my audience is too good. You guys like Octavius, and you're here every day, and so like when I just say something off the cuff, I don't have to introduce it or anything. Like you generally, you know what I'm talking about, right? So that might be disrupting my thought process. Let me go back and analyze this a little bit better, okay? So, what are we looking for? We're looking for large meta order, evidence of large meta orders. So we get that, we get that. So are we having another leg is the question. Okay, well, what was the cumulative delta doing? Okay, so there's the first meta order. That definitely was definitely a thing. Okay. Here's the second one. There was a little bit of cross currents, but it looks like there was a pretty good meta order that pushed us up for a second leg. So what about now? Is there one there? And I'm going to say no, there's not. Its cumulative delta is not moving up. And it's really, it just came back to the top of that range. So this might be market maker shenanigans to try and fool a bunch of people into getting long. Because, you know, this market maker short really got screwed over today, right? So he might be trying to fool people into going long here so that he can take on a little bit more inventory and kind of what is the word? Even it all out. There is a 1,000 lot MBO who sold 13.5 and put a bid to take profit at 11.5. So you might be right. You saw them get put on at the exact same time, huh? It's kind of weird. See, it is already coming back. I don't know if I should call this one a victory for me. Because, at first I was like, I'm not going to try and call it. And then the more I looked at it, the more I was like, I'm a little suspicious about this one, right? I don't think that I called it. And Steffa, do you practice on leak? As of late, no. So you know what? I have interviewed for so many companies, and I have not had a single one give me a leak code style interview. So there was a time during like a year and a half ago or so, when I was kind of like starting to think it's about time that I start moving on and to new opportunities and things, and I gotta brush my skills up, and I should start doing leak code and all of that. So like I practiced a bit with that, right? But like the conclusion that I quickly came to was that wasn't really doing anything for me. I think that if I was trying to get on as a developer for Google, that maybe that would matter, but especially since I'm interviewing for like SR site reliability engineer roles, it's not so useful. Is actually the site reliability engineering, man, it's really weird. The way that it works, because I'm thinking like, what's hard, right? Hard is like, there are some problems on leak code that are hard to solve, and like they, especially when they start to give you, oh, it needs to solve it in a certain complexity and all that sort of stuff. Like, yeah, that's hard stuff. That's you need to. Not everybody does that. Not everybody's good at that kind of problem solving, right? And so I would think that doing jobs that pay more than your standard developer would be you're solving even harder problems like that. But it turns out to not actually be the case. I think that it turns out more that things get paid because of the supply and demand for it, and the amount of impact that it has on the business. So a site reliability engineer gets paid a lot because, one, not very many people have the skills, which is why I say that it's actually, if you're a coder, it's actually a pretty good place to target, because it pays well and you can totally pick the skills up. Not very many people have the skills, but they're not hard skills to pick up. They're just configuration files. Like almost half of SRE is configuration files, right? And the value comes from, there's not a lot of them. There's not a lot of them with experience, and the experience knowing what to do and everything is valuable. And it's stressful because you're dealing with like critical situations and stuff like that. So I don't get a lot of places asking me leak code questions. They're asking me more like free-form questions about specific technologies. And really all they care about is, you've used that technology before in the past. You understand it. You understand the thing that they're having a problem with. So now I would like to spend some more time doing some deep, but I want to do like deep learning on Rust, right? So Because again, we would like to build our own platform. I'm kind of thinking of doing it in Rust, but I don't have much experience in it. And I think that it would be a not easy thing to make in Rust. So I have to start practicing and building up my skills. And probably I need to be doing more networking too. Like, I don't know if the interview circuit really died off, man. I thought that it was going to be like after the election that we would see more jobs, but it was the opposite. Like, less serious jobs and less people contacting after the election. So I'm hopeful, but it may be the case that for the next month, I guess it's only a month. I guess it's just December because we're almost done with November, right? I think we'll be okay. But it may be the case that in December I'm just a ski bum. Watching kids and being a ski bum. Because, it's going to be harder to find a job in December. And then hopefully January comes along and the jobs free up again. Most concerning to me is that I'm not seeing a lot of site reliability engineer roles being posted locally. Like jobs that would be non-remote. So that means that the whole startup and culture in Utah and everything is hurting. Oh, hey, somebody asked a question, actually. Why is he not a billionaire if the efficient market is the myth? Oh, it's actually so much worse than that. I will make a video about that after this. Oh, you know what? By the way, I didn't put my cumulative delta on here. So today's task is to take another look at cumulative delta and possibly do some changes to. I think that basically I'm going to So right now it's like, oh, okay, here's a bars done, and then I go and I write it. I need to make something that's like, okay, every time that we need to write a line, like, just put it in this data structure, and then at a certain point, like when that day is done, then we write them all. So like going bar by bar, it will write to the file every bar. But like when we're doing, like, if it's doing it historically on tick replay and stuff, and it decides that it needs to write files because you've decided that you want to cache what it calculated from tick replay, it shouldn't write to it until the day is done. Something like that. That's one of the things I want to add here. So. I can make that video and I can spend a little bit more time thinking about what I want to make in a video for these different indicators. Make a YouTube short. I'll make sure that It is time for me to get going though, so I do feel maybe it's like no big deal. You guys are probably like, Seth, you're thinking it too hard, but like I just don't feel like I'm like all there today. Well, whenever. I feel like I can get a lot done, so let's do it. I will see you guys tomorrow. Stay excellent, team.